The Bank of Canada's senior deputy governor, Carolyn Rogers, called the country's banking system an oligopoly, using the sector as a key example of how limited competition is restricting growth. For more on this, we're going to bring in Andrew Spence. He is the CEO of Spence Strategic Consulting Group. Thanks for joining us. Appreciate you taking the time.
It's my pleasure.
So you, I believe, have written a whole book that seems to be in line with the comments coming from Carolyn Rogers. Do you agree with what she's saying?
I don't think there's any doubt whatsoever that Canada's banking system is an oligopoly. I think one way to really make the point clear is that if you look at the bank's return on equity in its domestic commercial and personal businesses, it's about 5 times what they're able to generate in the more competitive businesses they have in the US that align with their Canadian business. So I don't think there's any doubt that we have an oligopoly. I think the real issue is, what are we going to do about it?
What are the options?
Well, the one option that has been very successful in countries that have embraced it is the concept of open banking, which really means allowing the fintech universe to be made available to individual consumers so that they now have a choice about where they can go to source their financial services. Now, Canada is seriously behind in the introduction of open banking. The UK is probably the jurisdiction most advanced, and they introduced open banking almost 8 years ago. And they've been very, very happy with the net results. In 2019, about 2 million people or so used open banking. And in the most recent data in 2024, it's almost at 14 million individuals that are using it. And what they've experienced is much faster transaction times, much more consumer choice, better customer service, and much sharper pricing, both in terms of the cost of transaction and the products that are delivered to consumers.
So how do you actually go about implementing open banking? Like, I'm assuming there would be pushback from certain sectors on this, maybe.
Well, there already has, right? I mean, we've been slow walking it now for some time. There's 3 things you've got to get right. You've got to get the technical standards in place. You have to have a degree, obviously, of consumer protection. And finally, you have to have a focus on the part of policymakers that puts competition and efficiency as a clear policy objective. If you're not prepared to do that, then you really shouldn't be doing open banking in the first place. Now, Carolyn Rogers in her speech today focused on the absence of a real-time rail in Canada, which is an instantaneous settlement system. This was supposed to be ready in 2022. It's just been built and completed, and beta testing is about to hit the road. And so if you contrast that to Brazil, for instance, it conceived of, initiated, and implemented its real-time rail, or its instantaneous settlement system, in a mere 18 months. It's run by its central bank. It's giving Visa, MasterCard, and the local banks a real run for the money. But most importantly, it has brought many people who are excluded from banking services into the financial system. And so it's been very, very successful. So we have to ask ourselves a question: why have we not been able to do so here in Canada? We were once a leader in things like digital security. Now we're in the bottom 11 of 70 countries.
Mm-hmm. Okay, so I take your point that that's a good option to move forward. I just want to get a better picture of the banking landscape in Canada right now and what it looks like. Rogers was saying profitability of the banks has made them less likely to take major risks with Canadians' money. I take it you agree with that. Is that what you're seeing? Is that maybe the main problem with what we have right now with 5 or 6 major banks in Canada?
What we know is that countries that embrace markets and competition have a higher standard of living. And if you look at the amount of revenue that our banks are carving out of the economy, and it's regularly about 8% of a $3 trillion nominal GB economy, which outstrips the United States, United Kingdom, France, and Australia. Moreover, if you look at the return on equity of banks, it's been a bit tougher for them for the last couple of years because of the move up in interest rates everywhere. But regularly since the end of the financial crisis, Canada's banks have been running return on equity pretty close to 16% every year. Australia, which is, I think, the market that looks closest to us, is about 11%. The US is about 10, the UK is at 8, and France is at 7. And so whichever way you cut it, the return on equity is very, very large. And banks are able to pass through very large dividends to their shareholders. And we know from our own experience with customer service and the high cost of banking, that customers are second towards rewarding shareholders.
Just in our last minute here, how long do you think it would take to kind of rework the banking sector in Canada, maybe implement something like open banking? Like, what's the timeline there?
Open banking can come in pretty quickly once you have the technical standards in place. But there are two things that are missing that suggest that the initial open banking experience in Canada will be disappointing. The first is we're not able to initiate payments from the competing fintechs providers. And secondly, Canada's not ruled on who owns customer data. To my mind, the data belongs to the customers, the bank clients themselves. The banks would like to say they own the data. They're merely the custodians of it. They're going to have to share that data with the fintech universe, but they're going to want to charge for it. And the more they can charge for it, the less revolutionary that introduction of open banking will be. But at the end of the day, we've waited so long with the rise of stablecoin, the rise of crypto, the dazzling world of decentralized finance is almost upon us just at the time as we embrace the technology that's already been existing in many countries for the past 8 years.
Okay, really interesting conversation. Andrew Spence, CEO, Spence Strategic Consulting Group. Thanks for your time. I appreciate it.
My pleasure. Thank you.